So basically, I'm just gonna give you a brief overview when you do when you start processing. So basically, the first step, you're gonna start with source documents. So guys, we're gonna do comprehensive example 10.1. 10.1, which is on page 302. So basically, the first step is, so as let's say now you now a bookkeeper or accountant of a company. The first step is source documents. What are source documents? Source documents are all your invoices, your bank statements, you know, receipts. So those are your source documents. So you're gonna record into your accounting package. So normally accounting companies are using accounting software like Pastel, EggPack, SEP, Meconomy. So there's different accounting systems that companies are using. So basically, when the companies are using, they're using different accounting. So remember previously when you process accounting records, that will be done in, they used to be done manually. So they used to be books. So people used to write accounting records manually. They had receipt book, 8-column ledger books. So people were recording that transaction manually. But since now they've been using these accounting packages. So once a company has transaction, they can record those transactions in their accounting, whatever accounting package that they have. So for example, if I'm going to give you an example. If there was there's a company, let's say I've got a company. That company, for example, buys and sells stationery. So if I've got a customer comes, buys stationery in my company, I'm going to issue that customer an invoice. So let's say they buy stationery, cash, or they EFT the money. So let's say I charge, they just bought, so because I buy and sell stationery, let's say they bought a printer. The printer is about 7,000 and they've made an EFT of 7,000. So obviously I've issued them an invoice of 7,000. So after issuing them an invoice of 7,000, this money they've did an EFT for 7,000. So that transaction in my books is I've got a money coming into my bank statement. So if I record that money into my accounts, let's say this customer is a data they buy. They've got an account with me. So that day, let's say they bought cash, they didn't take it on account. So I've received, they've EFT'd 7,000. So I need to record. So at the end of the month, every company does a bank reconciliation. So there'll be a bank. So on the bank reconciliation, there will be a transaction of 7,000. Let's say that happened today, 7th of May. So at the end of the month, which is May, I'm gonna be doing a bank reconciliation for May. So on the 7th of May, I'm gonna see that I received 7,000 Rand coming into my bank account. So basically, I'm gonna do a bank reconciliation. So there's gonna be, so my bank is gonna be debited with 7,000, and what will be credited? So basically, on a monthly basis, all the companies will need to do a bank reconciliation, and normally it's done on a monthly basis. At the end of the month, you will get a bank statement, and that a bank statement will be recorded on an accounting package. So when you see that I had a customer on the 7th of May, when you pick up on that bank statement. So on the accounting system, you are gonna record a debit on the bank statement, and then you're gonna credit your sales because I received money. So it's gonna be debit bank and credit sales. So if that is the only two transactions that happen for the month, the next step is the general ledger. The general ledger will be debited with bank 7,000, sales will be credited with 7,000. What will be the next step is if I generate on my system a general ledger, I will see that an account called bank will be debited with 7,000, an account called sales will be credited with 7,000. And if I draw up a trial balance for that month, there will be an account called bank being debited with 7,000 and the sales being credited with 7,000. So this is if that was what happened for that month. So this is in case that's what happened for that month. So I'm just giving you a brief to say that this is the process. Source documents, from source documents you go subsidiary journals, which is your cash book receipts, cash book receipts, debit bank credit sales, and then the next step general ledger individual account, debit bank credit sales, and then the next step will be your trial balance. So every year now, every company, let's say now this is the only transactions for the year, there has to be year-end journals for audit purposes. So if now it's going to be your financial year end, so normally a company will run the financial year for 12 months. So let's say the financial year starts in March, it ends in February. So February will be the end of the financial year. So basically now a trial balance for February, let's say February 2022. That's the most crucial trial balance. So you need to check that as an accountant or bookkeeper, there is no additional entries that you're missing that still needs to be accounted for the last month of the financial period. So in this example, financial year-end procedures. So we are basically doing those final entries before the auditors come in. Because remember, after you've processed everything that needs to be accounted for that financial period, which is March to February, you need to make sure that all the entries are in before the auditors come and audit that trial balance. So let's do example 10.1. The following balance and totals appeared in the books of Jena Traders on the 28th of Feb, the end of the entity's period. So meaning this company, Jena Trading, the financial year end is February. So this is the trial balance as it, this is their trial balance as it, the end of the financial period. So required, open ledger account with a given balance and total, show the closing transfers in the journals, post the closing transfers to the ledger accounts, and prepare post-closing trial balance. Okay, so the first step, you're gonna take this, let's just see. Closing transfer. So you're gonna take this general ledger. Post-closing trial balance is this one. So you need to also understand that which accounts will go to your financial position section, which account will go to your income statement. So I just want to see. Oh, okay. Okay. Let's just look at entry number 1, closing transfer. So basically in the first entry, oh, they're taking it to the profit and loss. So you need to understand assets, liabilities, equity. They form part of your statement of financial position. And your say your expenses and income will form part of your profit and loss account. Will form part of your profit and loss account. So basically this one, I want you to, before we do the first one, remember guys, within the previous learning units, you should have gone through your inventory. So your inventory talks about there's 2 types of account inventory system. So there is a perpetual inventory system and periodic. So in your, so let's just briefly look at the difference between the two. So the difference, closing off the income accounts by transferring their totals to the profit and loss account. So if you're using the perpetual account, the perpetual inventory system, when you close off an income account by transferring the totals to the profit or loss account, you're gonna debit income account and you're gonna credit profit and loss account. So this is when using the perpetual. So in this example, we need to find out what are they using? What are they using? Are they using perpetual or are they using periodic accounting system? Let's just see if they did mention in this example. So let's just read this, and then when you do the periodic system, income accounts are going to be debited and the profit and loss. So just look at the 2 differences. Can you see that when you close off income accounts by transferring their totals to the profit and loss account, you're going to, account debited is going to be income and you're going to credit profit and loss. Can you see that for both perpetual and periodic, you're going to be doing the same thing? You're going to be doing the same thing. So let's look at this example. Let's look at the income which is sales. Let's look at sales here. So here, profit and loss account, they've debited and they've credited Okay, let's look at the next one. When closing off the expense account by transferring the totals of the profit and loss, you're gonna debit the profit and loss and you're gonna be crediting the expense. This is both the same way. This is the same way. Closing off the expenses. Let's just see. Closing off the expenses by transferring the profit. So by both the system, let's see. Both the system, you're gonna debit the profit and loss account. There it is. You're gonna debit the profit and loss account. And you're gonna be crediting the expenses. You're gonna be crediting the expenses. Closing transfer of expense account. So basically, on the profit and loss is gonna be debited with 44,100. So let's just see profit and loss. Let's just go down. Nominal accounts. So this profit and loss, let's just see. I just want to ask to do this example of just this one account. So look at this top part. It's saying closing off expenses. So remember, expenses, income are part of profit and loss. So here you sort of like taking the individual expenses. Yes, the individual expenses. You closing transfer. You closing them, meaning they're all debited. Let's just look. The TB. Where is the expenses? So normally an expense is a debit. So when you credit an expense, you sort of like you closing it. So you're gonna credit this and everything is gonna be transferred to the profit and loss account. Let's go down. So nominal accounts are normally income and expenses account, and financial position section is all your equity, asset, and liabilities. So let's just go down. Let's go down. So profit and loss is debited with all of these expenses. With all of these expenses. Profit and loss is all debited with all these accounts. And then the balance, because profit and loss, income and expenses affects capital. Where is capital? This will go here. This will go here. The 3, let's just go down. This balance here will go here. 339. The 339 is all here. So basically in this exercise, what I'm looking at is they're sort of like creating lumping all the income and expenses, and just making sure that everything will be in this account as one. So they don't want to show a post trial balance. They don't want to show income and expenses in this account. So I'm gonna go up. Can you see the post closing is not showing income and expenses. So I'm gonna go up and go to the previous. I'm gonna show you another TB here. Look at, I want you to look at the TB in page 295. Can you see a TB in page 295? So the trial balance in page 295 is showing the statement of financial position section, which is income, which is balance sheet, which is assets, liabilities, and equity. And then there's a nominal account, which is income and expenses. So can you see this trial balance? This trial balance here is showing us the statement of financial position section and the nominal account section. But now when you do the post trial balance, the post trial balance, what is it doing? It's taking everything here. It's taking everything here, adding it together, and just putting it into this balance. So remember, income and expenses, they are part of equity, and capital is part of equity. So in this, so the post trial balance is basically saying that the sales here, the sales, I'm gonna do a journal. I'm gonna debit sales and credit profit and loss. I'm gonna credit the sales return and debit profit and loss. So basically it's taking everything here, everything that's here to the profit and loss. So if you can, what I want you to do now is take sales, the sales amount, and then minus everything else here and add up this and just tell me how much you get. I want you to take this 15707.35 minus this 250, everything here, and add up this two and just tell me how much you get. How much are you getting, guys? How much are you getting? Just write there on the chat. Okay, you're getting 181. Okay, I'm busy also calculating 0.86 minus 18. I'm getting something different. Let me just recheck. Let me just recheck. I'm not getting the same amount. Hopolang, you're getting 18158. I'm getting a different amount. Let's recheck. I'm getting a different amount. That 2408 looks, I've seen that amount. Let's see. AB, yes, 2402. Guys, do you agree? Which amount is it? Which amount? Hopolang's got a different amount. AB's got a different amount. And let me also just double check on my side. Okay, I'm getting 2407.98. Am I right? I'm getting 20,000. AB is getting 2408.03. What is it, guys? Is it the 2408.03 or is it the 18? I'm out by 5 cents. Okay. Who is that? AB, you correct. Well done. Hopolang, the answer is 20,408.03. I've got another question. Did the company make a profit or loss? Just comment on the chat. Did the company make a profit or a loss? How do you determine if a company made a profit or loss? So remember, nominal accounts. Let's see. AB, well done on that. The company had made a loss. Yes, well done. Yes, Hopolang, they made a loss. So I'm saying to you, if the company has made a loss, if this is a loss, how will this loss affect this capital? Because now I want you to take this balance. How will it affect this capital amount? Because now we sort of like taking out all of this balance, which is the balance is 20,408, and we transferring it to this capital account. So a profit or loss, how is it going to affect this? Will it increase equity, which is capital, or will it decrease equity? Well, that loss, if a company has made a loss, will it increase or decrease this capital amount? Definitely, guys. Well done. The loss will decrease that capital account, and a profit will increase that capital account. So basically, this 178, please take this 178 minus that 20,000 that you got. Take that 178,000 minus 20,408.03. Add this amount, and tell me how much do you get this total here. So I want you to take 178 minus 178,000. Oh, sorry, network problems. Oh, Tulisilwe, sorry. So guys, I want you to look at this trial balance here. Take the amount, the loss that you calculated. After you taking that loss, take 178 minus that loss, and then add creditors control and add the sales balance. I'm getting, how much are you getting, guys? You taking the 17. Explain why add or not decrease. Okay, let me go back. Let's see. AB, you please explain why add not decrease. It is an expense. Please explain. So AB, I'm going to explain to say that remember it is decreasing Remember, this loss, that amount that you calculated is a loss. So if it's a loss, it's going to decrease your equity. And if it was a profit, it would increase your equity. So there is more on the debit side than the credit side. So if there's more on the debit side, it's going to decrease your credit side here, the capital. I don't know if you understand what I'm saying. So I'm saying take 178 capital minus that loss, because that loss is decreasing that capital, which is equity. It's decreasing equity because it's a loss. It's not increasing. If it was a profit, we would say 178 add. Now, because it's a loss, it's decreasing equity. We need to minus it. I don't know if you understand what I just said. Do you understand what I just explained? Okay, I want you to add, and I'll tell you at the end. I'll tell you when we finish the exercise that I want to show you. I will explain at the end why I'm saying add them. I will explain at the end. I want you to get me that figure. I will explain why I'm saying add them. How much are you getting? How much are you getting, guys? Yes, yes, we're getting the same thing. So, yes, the next step, what I want you to do is I want you to add up all this, everything on the debit. I want you to add up vehicles, add up office equipment, add up inventory, add up debtors control, and add up bank. I want you to add up all those 5 accounts. How much are you getting, guys? AB. So AB, now I need to explain to you why am I was adding creditors and the why I was adding the creditors and SARS, because all of them are in a credit side. So I was just telling you to add up everything that's on a credit side. So basically what we just did, you just transferred everything on the nominal account here and transfer it here to the capital account. And at the end of the day, after doing that, can you see that still your trial balance balances? So you just moved your loss, which is all the nominal accounts. You just moved all that loss and put it to your capital, and then added all the credits that's left. That's edit everything that's on your financial statement position section, and all the credits and all the debits. And can you see that still your trial balance balances? So basically, let's go back. I just wanted to show you guys this, that what we did, let's just go down to final accounts. So this part here is so important. I just want you to highlight this, this is so important. This is so important. At the end of the financial year, before the trading account and profit and loss account. So remember, the trading account affects your cost of sales, you know. So your cost of sales yourself. So before the trading account and profit and loss are opened, the total amount has been accumulated in the different income and expenditure account of the entity must be determined. This implies that different income and expenditure accounts must be closed off at the end of financial year so that new accounts can be opened in the new financial year. So income and expenses account of the entity are called nominal accounts and must be closed off at the end of the financial year by way of closing transfers. Closing transfers are entities in the accounting records whereby the accumulated totals in the accounting records are transferred to another account or accounts called the final accounts or the owner's capital account. Closing transfers are entered in the general ledger. These accounts are used as books of first entry for all transactions which do not have formal source documents or such cannot be entered. It is clearly stated that final accounts are used to determine profit. This is what we just did. Can you see? It is clearly stated that the finals account are used to determine profit. This is what we just did by adding up your nominal accounts, your debits and credits minus the two to determine if they did a profit or loss. Trading account is used to determine gross profit and is only applicable to retail. This part here, please highlight, is so important, especially when you're doing this final accounts. So let me just highlight this. This is so important. It's saying trading account is used to determine gross profit and is only applicable to retail entities and not service entities. The reason for this is that gross profit is the difference between total sales and cost of sales. A service entity renders a service and does not sell any goods. So the profit or loss account is used to determine net profit for the year and is used for both retail and service. So highlight, this is so important. So basically, when you do your final accounts, you're determining what is your gross profit or loss or your net profit. So let's just go down. So here, can you see here? You're gonna take here, this part, basically 1, 2, 3. You are determining if they've made a gross profit or loss. So by taking this to a trading account, the company is determining if they've made a gross profit or gross loss. So if sales is bigger than cost of sales, they've made a gross profit. If sales is less than cost of sales, the company has made a gross loss. So in this situation, let's just see if the company has made a gross profit or gross loss. So So you tell me, did the company make a gross profit or gross loss when you're looking at this? Just tell me on the chat. Yes. And how much? How much was the profit? The gross profit? How much is the gross profit? How much is the gross profit? Yes. Yes. Guys, do you know where we got the 72,000? Do you know where we got the 72,000? So remember, in this account, we're taking out cost of sales, which is a debit account, and we're putting it into a trading account. We're taking out the sales account, which is an income, and putting it into the trading account. So 180,000 minus 108 is this. So the trading account is going to be debited with 72,000. The profit and loss account is going to be credited with 72,000. Can you see? So if it was a, can you see? Yes, saying transfer gross profit because the sales account is bigger than the trading account. So can you see? This one now, rental income. Rental income, because it's an income, is going to be debited and you're going to credit the profit and loss. And then where do you know how the 33,900 comes about? So can you see that in this case, a profit is going to the capital account? Let's go back to the to this. Let's go back to what we did in the previous exercise. So remember, sales is income. So I want you to take out the sales minus cost of sales minus water and electricity minus telephone minus salaries minus stationery minus rental income and minus drawings. Remember, drawings always decrease capital. I want you to tell me how much you're getting here and add all the income together, minus all the expenses and minus drawings. So accounts that will always affect your capital or your equity. It's all income and expenses and your drawings. So those accounts will affect your equity. They are part of equity. You know, for now, what I want you to look at, except don't look at drawings. Drawings don't say. So at the moment, just look at, add up all your income in this trial balance and minus all your expenses. I want you to focus just on the bottom part. Add up all the income and minus expenses. And tell me if the company, did it make a profit or loss? Add all the income minus the expenses. Tell me how much you get. And I get an amount here. AB's getting 18,150. Are you getting 18,150 by adding all the income and minusing all the expenses? Oh, guys, hopelang you can't hear me. Hopelang, I'm saying please add all the income and subtract all the expenses. I'm saying please add all the income and subtract all the expenses on the trial balance. And just tell me how much you get. How much do you get, guys? AB is getting 21,900 and Lastana is getting 33,900. Which one is which? And just mention there if is it a profit or is it a loss? Is it a profit or is it a loss? Which one is which? AB is getting 21,900. Is it a profit or loss? And Lastana is getting 33,900. Is it a profit or is it a loss? Yes, it is a profit because yes. And guys, the answer is the answer is 33,900 profit, and Lastana is correct. And AB, do you know why how we got 33,900? So how we got 33,900? We said 1/8. Yes. How did we get 33,900? So how we got 33,900, this is what we did. So I said sales, which is income, 180,000, rental income plus 6,000. So I said 180,000 plus 6,000 minus 108,000 minus 14,300 minus 2,400 minus 25,800 minus 1,600. How much do you get? So we said sales 180,000 plus rental income of 6,000. So try that A, B, and C if you get to the same amount. Yes, yes. And then after getting this, I want you to tell me if that amount, are you gonna minus or add to capital? Are you gonna add or minus to the capital? Are you gonna add this profit to the capital? Are you gonna add or minus? Are you gonna add or minus to your profit? So AB saying add. Do I agree with AB that you're gonna add to your profit? Capital. Are we gonna add or subtract the profit to the capital account? Are we gonna add or subtract? Just comment on the chat. Are we gonna add or subtract? So you think we're gonna add? Yes, we are. Definitely. Yes, we adding the profit to the capital account. Yes, correct. We will be adding that. We will be adding the capital account. So can you see, look at this. I just want to you look at what we just did. So basically, when you do, when you the first part, what is required? Open ledger account with the given balances. So you're gonna go to the general ledger. Let's go to the general ledger. When you go to the general ledger, you're gonna credit 87450 with this balance. You're gonna debit drawings with 3,750, which is this one. So guys, the first part of number one of what is required, do you have a problem with that, with showing the balances in the general ledger? Just comment on the chat. Just comment on the chat. Sanel, yes, you can unmute, please, please. I see you've raised your hand. Sanel, not sure if you've got a question. Sanel. I see Sanel. Yeah, please, please unmute. Sanel. If you're having connection problems, you can write. Okay, what is we are not given the balance? What if we are not given the balances? So remember, it's not possible that you're not given the balances, because that is the first step. Remember, you can't have a year-end close without balances as at year-end. I don't know if you get what I'm saying. You cannot have year-end close without year-end balances. So remember, the final trial balance is the trial balance that the entity is happy with, that the auditors can audit that balance. Now you're taking everything. You're determining if the company has made a profit or loss by taking all the income and expenses to your profit and loss account, and determining if the company has made a profit, a gross profit or gross loss, by taking your sales minus your cost of sales and putting everything under statement of financial position. So it's not possible that you can have a year-end close, or you can have your year-end procedure without your year-end balances. Without this balance, it's not possible. This is the starting point. So you can't do your year-end procedure without these balances here. So my question to you is, guys, the first part, to opening a ledger account and putting those accounts into the ledger account. So remember, capital. So in this case, what you need to understand is, what is capital? Capital is equity, and equity increases on the credit side. So this will be your credited in the general ledger. Drawings, drawings decreases owner's equity. So when it decreases, owner's equity should be on a debit side on the general ledger. Land and buildings is an asset, and an asset has a debit balance. You're gonna debit this. So my thing is, especially when you're doing the first part, you need to understand your accounts to say what's an asset, what's an income, what are my financial position accounts, what are my nominal accounts. So the first part, guys, are we happy? Can I move to number 2? Are we happy with what is required in number 1? Just comment on the chat. So what is required for number 1 is for you to say capital. I'm going to take this balance of 87450 and I'm going to credit it in the general ledger. There it is. I'm going to take the drawings account 30,750 and I'm going to do what? And I'm going to debit in the general ledger. I'm going to take land and buildings and I'm going to debit in the general ledger. Here it is. So guys, are you happy with what is required, or what is required in point number 1? So point number 1 is basically you taking the balances that is already given here and just putting them in your general ledger. So you just taking what is given, and you putting it in your general ledger individually. But you need to understand, which account is a debit, which account is a credit, which account you'll be debiting, which account you'll be crediting the general ledger. And then I'm gonna go to number 2, closing transfers. So number 2, so point number 2, you're taking out everything that's here. Ne? You're taking everything, sales, Sanel can hear me. Who else can hear me? Oh, AB saying is clear, and shame Sanel can't hear me, and the others I'm not sure, hey, because they're not responding. So I'm not sure if the others can hear me, hey. Oh, that's good. That's good. That's good. You can hear me. So guys, please, if AB commented that they can hear me. Oh, that's good. That's good. That's good. Lestana can hear me, and Sanel is saying they can hear me. So guys, please comment on the chat. My question is, point number 1, are we happy with? Are we happy with what? That is good. So my question is on this exercise, are we happy with point number 1? Are we happy to open the ledger account with the given balances and totals? Are we happy? Are we happy with that? Okay. Number 2. Remember number 2, what is it doing to you? What you need to do is, first of all, number 2 is you taking the sales and the cost of sales to your trading account. You taking your profit, you taking all your expenses and income to your profit and loss account, and you transferring the balance out of your that you get from your profit and loss to your capital account, and then you're taking out the balance from your drawings account to your capital account. So are we happy with the journals for the transfer? Remember, the journals is you taking cost of sales and sales to your trading account. You're taking your expenses and income to your profit and loss. And after you get that profit, you're taking it to the capital account. And you're taking your balance from your drawings account. It's what is decreasing your capital account. So the third step is post the closing transfers to your ledger. So remember, how does a ledger, how do you do your ledger? When you've done a journal like this, whatever you're gonna be doing in your ledger is gonna be the same thing. So if you've trading account, you've debited with 108,000. When you go to general ledger account, trading account N8, you're gonna do the same thing. Whatever you've done in your general ledger, you're gonna be doing the same thing in your, whatever you've done in your journal, you're gonna be doing the same thing in the ledger. So for example, your trading account is 108,000, is debited. When you go to the trading account in the ledger, where's the trading account in the ledger? Can you see that the trading account is also debited here with 108? So whatever you've done in your general journal, you need to do the same thing in your ledger. Can you see? You need to do the same thing in your ledger. And at the end of the day is what balances are left after you've posted in your ledger. So what is left is this 117. So basically now, after posting everything, so after posting everything, you gonna check all your ledger account and see where is a balance. Where are you left with a balance after posting everything? So capital, we've got a balance of 11600. So this balance needs to be credited in your trial balance. So you're gonna credit your trial balance with this. Drawings, can you see? It's 0. there's no balance left. Land and buildings, there's a debit. You need to debit trial balance with 60,000. Vehicles, you need to debit with 50,000. Inventory, you need to debit with 5250. Debtors control, you need to debit with 3,800. Bank, you need to debit with 2,800. And creditors, you need to credit with 4,300 in your trial balance. I'm gonna say this again. When you finalized doing your general ledger, you're gonna see which account still got a balance. Capital is got a balance of 117,600. You're gonna credit your trial balance with 117,600. That's the balance that's left. Drawings, there's nothing. There won't be a balance for drawings. Land and buildings, you're gonna be debiting with 60,000 in the trial balance. Vehicle, you're gonna be debiting with 50,000 in the trial balance. Inventory, you're gonna be debiting 5,250 in the trial balance. Drawings, you're gonna be debiting with 3,800. Bank, you're gonna be debiting with 2,850. And creditors control, you're gonna be crediting with 4,300. Can you see that sales this is closed off to profit and loss? Cost of sales is closed off to trading account. Water and electricity is closed off to profit and loss. There's no balance. Stationery, there's no balance. It's closed off to profit and loss. Telephone, there's nothing, closed off to profit and loss. Rental income, there's nothing, closed off to profit and loss. Trading account is closed off because sales and cost of sales are closed off. We've got a gross profit. Profit and loss is closed off. Can you see? Can you see the trial balance? Can you see? There's a hand up. Let's see. Sanele, please, can ask your question. Sanel, I see you raised up your hand. You can ask your question. Sanel? If some accounts are closed off, what does that mean? So meaning if those accounts are closed off, meaning you cannot carry them to the next month. So they won't form part of an opening balance. So basically, when they closed off, like now, because we've moved all the income and expenses to the profit and loss account, and then that balance we've moved to the capital account. So meaning that account for that period is closed off. So meaning for this financial period, so it just means that for the financial period ending 28 February, these are the only accounts that needs to be audited. Remember now the others are closed off. The balances do exist, but they were moved to a profit and loss account. So this means that this balance here of 1,600 has been moved to profit and loss account. So it just says that 1,600 has been moved to profit and loss account. So basically it's saying it was this stationery is in this profit of 33,900. Do you understand, Sanel?
Yes, thank you so much, ma'am.
Okay, so it means that now they lumped into the profit. So the profit of the company is 33,900, but what forms part of that 33,900 is the sales minus the expenses. Is the sales minus the expenses. So guys, I want you, after this, please go through example 10.2 on your own. Do the same thing for exercise 10.2. I want you to attempt 10.2 on your own. I want you to attempt 10.2 on the next exercises. I want you to attempt on your own. Please. So now I'm gonna just do and just comment on your side on the chat. Please attempt the next other exercises on your own. And if you've got Sanel, did you raise your hands? Please say your question. I see you raised your hand.
Yes, ma'am. I just want to know, do you offer the extra classes with this module, ma'am?
Do I offer?
Do you offer extra classes with this module?
I'm confused. So basically, this is the class that I offer.
Yes, I'm saying, do you offer classes as in daily, or it's just certain days that you teach us, then it only few days?
So it's only on Saturdays, but as per student demand, you can require an additional class maybe during the week. So normally Saturdays. So I'm saying the next class will be on the 14th.
Oh, now I understand. So if I want to request more classes, would you assist me with that?
So it will depend on the availability of other students. So if other students will say, yo, ma'am, can we please, because no, my next class is next week, Saturday. So I'm saying to you, between now and next week, Saturday, go through this. If there's still problems, let me know.
Oh, okay, thank you so much, ma'am.
Yeah, let me know if there's, so if from now till Saturday, if there's anything, because remember this class is a practical class. You cannot get after this class, go and like wait for another class. You need to practically do the class, the exercises. You need to practically do the classes.
Okay, ma'am, thank you so much.
Okay, you need to practically do the classes so that you can know that, oh, I'm missing, this is where I don't understand. So I'm gonna just do a brief of learning unit. Which one is it? 11. Let's look at 11. So 11 is on financial statements of a sole trader. Financial statements. So it goes for year-end adjustments, accrual, So remember what, okay, let's just go down. Gonna go down. At the end of every accounting period, highlight this. At the end of every accounting period, a business prepares a trading account and a profit and loss account to ascertain the profit or loss made during the accounting period. It is important to realize that the profit and loss account indicates the performance of the entity for a particular financial year. So basically, profit and loss account, shows the financial performance of a company. So let's just go down. It is usually happens that at the end of the year, some expenses incurred by the entity will be outstanding. So the entity may also have paid for some expenses in advance, and it will therefore be necessary to adjust such expenses in order to determine the actual expenses incurred for the accounting period under review. Similarly, the entities have rendered specific services during the year for which it had received no payment. So basically, at the end of the year now, this point is called year-end adjustments. So year-end adjustments is the trial balance is finalized, but there is additional adjustments that the company has to take into account. There is additional accounts that the company needs to take into account. So basically in this learning unit, you need to make sure that you take into account, let's see. So how do we get notified with the invite link for lessons? So the link that you used today, you can use the same link to join the class. I don't know if that makes sense. How do we get notified with the invite link for lessons? The link that you joined today, that will be the same link that you can use for the next class. I don't know if that makes sense. Pre. You can use the same link. Yes, yes, yes. Yes, you can. Yes, you can use the same link. Yes, you can use the same link. And the time of the next class. So the next class, guys, will be the same time. Will be the same time, which is 11:30 to 1:30. So for next week, for you to prepare for the next class, I need you to go through this example that we did. Make sure you do other exercises on it, and then we're gonna be focusing, I think, mainly next week on doing we're gonna be focusing on doing this learning unit. We're gonna be doing learning unit 11 next week. So please, 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 if you have time, go through it so that at least by the time the class starts, you're already prepared. You're already prepared for the class. So the recordings, UNISA will the recordings, where do we get? Oh, so the recordings, UNISA will need to amend the recordings and it will be sent to you. You will get it. The students will be get it, but I'm not sure when you'll be getting the recordings. So the recordings will be sent to the students, but I'm not sure when you'll be getting the recordings. Yes, I see that you said you joined late. So basically, as you said, you joined late, what we went through, this is what we went through. Let me just go up. So today we just went through an exercise in learning unit 10. So we went through a 10.1. So this is what we went through. We took all those balances. So I said the first step, what's required? You need to take all those balances to the trial balance. Remember, capital will be credited in the general ledger as an opening balance. Drawings will be debited. Land and buildings will be debited. So all of this you need to take to the general ledger. The next step is show the closing transfers in the general journal. Basically, you're going to be taking all your sales and cost of sales to the trading account. You're gonna be taking all your income and expenses to the profit and loss account, and then you're gonna be taking a profit or loss to your capital account, and you're gonna be transferring of drawings to transferring your drawings account to the capital account. Basically, this is the transfer account. After you do that, you need to move everything that's on your general ledger to the general ledger as it is. So trading account will be debited in your general ledger. Cost of sales, 108,000 will be credited in your general ledger. Sales will be debited in your general ledger. Trading account will be credited in your general ledger. And then at the end, after posting all of this to the general ledger, whatever balance that is left, whatever balance whereby there is a balance like this, 17,800, 117,600 will be going to your trial balance. Drawings is closed off. The balance of drawings is taken to the capital account. So there's nothing for drawings. Land and buildings, 60,000, there is a balance. This will go to your trial balance. Vehicle, there is a balance of 50,000. It will go to your trial balance. Inventory will go to your trial balance. Debtors will go to your trial balance. Bank will go to your trial balance. Creditors control will go to trial balance. But nominal account, this sales account, there's nothing because the balance was moved to trading account. Cost of sales, there's nothing because the amount was moved to trading account. Water and electricity, the balance here was moved to profit and loss account. Salaries was moved to profit and loss account. Trading account was moved to profit and loss. Telephone was moved to profit and loss. Rental income was moved to profit and loss. The trading account, it determined that there is a gross profit. It also that that close off profit and loss. It also closed off. Let's just see. So in the, can you see profit and loss is also closing off? What is left is this, where there's a balance. The neutral balance must always balance at the end. So how did we get to this balances to close off? It starts here. This is the journal that was done to close off those general ledger account. Can you see, guys? Please, 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 if you're still struggling with this exercise, I need you to go through it, and then go through the next coming exercises after that. Please. Please go through it again on your own. And then remember, the main point is you taking out from the initial balance, from the initial trial balance that was given to you, you taking out sales and cost of sales to the trading account. You taking out income and expenses to the profit and loss. So you're taking out income and expenses to the profit and loss account to determine if the company has made a profit or loss. You're taking out sales and cost of sales to the trading account to determine if the company has made a gross profit or gross loss. That is the general journal for the that is the what you're doing here in the general journal. And also you're taking whatever profit or loss that you got, you're taking it to the capital account, and you're moving now the drawings account to the capital account. So please, 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 I need you to go through it again on your own, please. Please, any questions on that? Any clarity that you need? Any clarity? If not, guys, please let us meet next week.